Okay, hi everybody. This is Dennis Wilborn. I'm the founder of the Active Trend Trading. Welcome to How to Make Money Trading Stocks, Options, and ETFs. If you're joining us and on the recorded version of this, welcome. We really appreciate you joining us. And if you would, please feel free to share the content of this video. We basically do it as a courtesy to anybody who wants to join the free webinar on a weekly basis. And secondly, pay attention in the video towards the end of it. We have a couple of special offers that we're doing right now. But with no further ado, we're going to get on. And also, if you see this on Facebook and or if you see it on YouTube, please give us a thumbs up, like us, and we'd appreciate that. And my son would appreciate that. He's our marketing guy. So let's get on and take a look at what the heck is going on in this crazy market. And so, okay, well, again, let me make sure that I'm recording. I am recording. Good afternoon. This is Dennis Wilborn with Active Trend Trading. Welcome to How to Make Money Trading Stocks, Options, and ETFs. Just as a quick reminder, all materials that we do present are for training purposes only. Traders should always pay per trade. Any new method, probably the risk of their own personal capital. Past performance is not an indication nor promise of future performance. And with that said, I'm going to jump right into the charts. Very interesting stuff going on in the market right now. We had the Fed meet. Fed met on Wednesday, of course, and reported out. They reported out that, they were going to basically take their time. They're going to be reactive rather than proactive in controlling rates and all that kind of stuff. And so that they'll raise them when they need to, but they're not going to just jump into, hey, let's raise rates. That was interpreted by the market as being dovish, and therefore the initial reaction to what the Fed did was, in fact, a bullish move. And we've had a bullish move over the last couple of days. However, and you always got to watch those however commas. What do we have going on right now in the individual indexes? Well, a couple of different things is going on. Yes, we're getting a nice little move up off the moving average. We broke out above the 40-week moving average, which is approximately the 200-day moving average, but not quite. The 200 on the daily is all the way up here, as you can see. What I'm looking at right now is TSI has gotten up to the midsection on a weekly chart, as price action has gotten back up into a level of resistance. Now, what level of resistance is that? If you basically just throw a fib on here from here to here, it's basically about the 72 retracement. And so it's moved up. However, I find this really interesting. One, you almost got like a double top on the daily TSI. And so with a little bit of bearish divergence or negative by divergence, and look what's going on here with the market forecast. Market forecast is pushed on up, where it is approaching highs where the green line doesn't stay up in these highs for very long, or it will start manipulating or moving between 100 and 75. But the other thing to notice is what's going on as the price actually has gone up. Volume has not been above average. And so what that tells us from the spiders is that, how much really is the heart of the market, a heart of the buyers behind this move up. And so we'll keep our eye on this, and I'm going to blow this up just a little bit so we can see it a little bit better. We'll see how things turn out, for today. I want to throw a quick fib on it just to give us give us our bearing on where we might be compared to this last move. If I go up here, grab this high, come down here and grab this low. As you can see, 786 retracement. We've come almost up. We've come up, hit it, and now it appears and this is also coincides with at the top of the Keltner channel on the daily chart, and it appears to be wanting to reverse, prices want to be reversing down from that. How far will they reverse? Don't know. Will it just be a simple pullback? Don't know. But all I know is that, yeah, it looks like a place, and that's why I basically put the note out today is, are we ready for a sell-off? The stocks that reported this week, some of them did well, some of them didn't do well. We saw that Facebook, popped up nicely. However, Amazon got whacked. And then what comes on Google? When is Google up? Google is up on the 4th. So stand by for Google to be. Just stand by for Google. See, because that could be the final catalyst that's going to punch us in one direction or the other. Here we go. The Qs are represented in NASDAQ. Very interesting. Right at the top of the Keltner channel. This is actually showing us some very nice divergence as the TSI has moved up, but has basically started, and it's not rolling over, but we have some negative divergence here. The weekly TSI is right up at the 0 line, which can oftentimes be a level of support or resistance for momentum. And then what's going on here? Really interesting. Over the last couple of days, we have had basically a 3-line cluster in the upper level on the market forecast. The longer term momentum has not tipped over yet, but this is where I like to, and you can do this in your weekend sessions as you're doing your analysis over the weekend. Just go back and say, okay, when the market forecast green line, that's the longer term momentum, gets up into these levels above 80, how long does it stay there and what has happened in the past? And as you can see here, in the past, it tends to roll over. It doesn't necessarily mean that the market is going to go into a full out sell-off. However, we do, this has almost gone straight up since the last part of December. It's done a little bit of pausing. It would be excellent if we got a little bit of a digestive move back down, maybe a 30% retracement, and then a bounce higher. That would help us out a lot. And when I say help us out a lot, it would give us a potential, really sweet place to be able to enter a trade. So TSI, talked about that. Market forecast, talked about that. And those of you who aren't premium members, we did a really good session on market forecast on Wednesday evening our premium training session. And so it's one of the tools we use as a secondary indicator, but it can be very compelling with what it shows for market reversals, especially on reversing out of the bottom. Take a last look at AWM. Excuse me, that is that's the ETF for the Russell. And what's it showing us right now? Let's get on over to there we go. Okay, don't have a reversal signal. However, it is showing something similar. The market forecast, long-term momentum, extremely overbought, negative divergence on the TSI, no real reversal yet, but we are at a place where we could expect a turnaround. If you throw a fib on this one, and depending on where you throw your fib on, but from this high here, just come in and throw your fib on. Yeah, you got to catch it. You got to catch the high. That one right there. Using the snap feature, sometimes it'll snap to it exactly like it did right. Hopefully there. And it didn't. Come on, Denny. There we go. And pull it down to our past low right here. And just look at it. As you can see, we have passed on up just slightly above, not quite to the 786. And so that still constitutes a level of resistance that this could bounce against and fall down. One of the things we have coming up in some of our training in the near future is we will be talking about both time resistance and price resistance. That's going to be, you're going to find that very interesting because there are methods, and I did the training. I went through a training session on this about 3 weeks ago. We're going to be presenting it, but there are methods by which you can establish with a mathematical probability when things will turn around, along with where things will turn around. And so it really helps if you understand that, helps with the patience quotient, if you will. So that's what I'm looking at AWM. A couple of items that, I'll just throw them up here very quickly is Amazon. Amazon was kind of getting, you can see I'm running through a lot of bandwidth today. Come on. There we go. Easy. Okay, after earnings day, last night, Amazon came out, and as you can see, it hit the skids. Now, this is over, almost $90 from yesterday's close, but it is just gapped back down to resistance. It's still got to break out below this 1592 area to be looking at, going on down and retest some of, the lows from last year. But it is, it was a indication that, hey, we're not going up any higher. Note the negative divergence on the daily chart, the day of earnings. So that's that. I encourage everyone to find a stock, find an ETF, find that basically you can focus on that can provide you trading opportunities on a regular basis. I had a very good friend of mine, Dougie Olson. Hey, Dougie Olson, you're right there. He used to trade options specifically just for Apple. And Dougie, you can pipe in. But during that time where you were focusing just on Apple, you did that because you were working full time. It was hard, but it simplified what you were doing. And by focusing on one, you became very intimate with Apple, and you did very well trading the options on that, did you not? This is where you're supposed to say, yes, I did great, Dennis. Glad to see you're back from your travels, Doug. And we'll see if Doug will respond to that here shortly. And you can just type in your message on the. So one of the things I'm looking at, I really like the picture or a couple of stocks that I like, and I'll just throw those out here really quick. I like Netflix. Why do I like Netflix? I don't like it that much I like Netflix because one, it puts in exceptionally good patterns that are tradable, utilizing the active trend trading tools, and they have great options and weekly options I can trade with. I love that. And so I just, basically, it gives us an opportunity. It has on average, what's its daily move? About $10. And so that opens up a lot, and it's a $300, $340 stock. That opens up a lot of possibilities on an intraday basis, not necessarily to day trade it, but on the intraday, looking for patterns on the intraday for taking, weekly swing trades that last for 3 or 4 or 5 days or even up to 2 weeks. It works exceptionally well, especially with the market with the way it is kind of flaky. The other one I like, and I've been trading this for, almost the last 5 years, our buddy Tesla. There we go. Similar type situation. It's a $300 stock. And it just, I mean, you know, you look at this on this is a daily chart, just going back to October, and look at the lows in October were down here about 250. The highs later in December was about 380. Gives you plenty of what I'll call just juice to be able to trade this, both on a daily basis and or a weekly basis. I love buying and selling the weekly premium on this. And as you can see, it averages about, it has I won't say it's its average true range, but just eyeballing it, an average range on a daily basis was about $10 to $15. It gives you plenty of room to rumble, if you will take it that way. And then if I only had one, and I'll just throw this out, if I only had one ETF or index ETF I could trade, it would basically be the combination of TNA, which is the 3-time leverage ETF for the Russell. Again, great opportunity. And when it moves, it's moving in probably 10% patterns. You can see here, pick it up here. This move here was 14%, almost 18%. So it provides opportunities to hit 5, 10, 15% very regularly. When it is going down, I flip over to my buddy TZA and look to trade TZA in the opposite direction. In other words, if TNA or IWM is going down, TZA should be going up, and that's what I'll be looking to trade. And it's looking kind of interesting on a daily chart, at least, in that we've got some positive divergence going on there. So if you're a premium member, we may be looking at something very soon with regards to TZA. So those are the two. Yeah, those are the stocks I wanted to cover just real quick. You know, like I said, pick a stock and kind of stick with it. I mean, it may only give you an opportunity to trade once every 2-3 weeks, but isn't that okay if it gives you the opportunity to gain 10, 15, 20%? Oh, well, thank you, man. Awesome. Thanks, Doug. And so, yeah, I'm getting a lot of, early warning alerts, which is now MAPS, the market action points, has been, that's a good segue into just finish up today's slides. And I'll just cover that. There's my son. This is the trading team, and this is also the education team. There's a picture of me in years gone by with my lovely bride. Michelle still looks the same. Well, as you can see, I look more distinguished now. Anyway, and then there's my son, his lovely wife, and our two grandchildren, David and Alani. And now that this is a family business totally, we're really loving working with each other. And Brandon gets on Dad and gives him a hard time. And just all remember, as we're moving towards the end there, your job as trader is to wait for the best possible opportunities. As David just mentioned, that you got to stay away from over trading. And without a doubt, money is made stocking and sitting, not being active and forcing a new trade every day. So here's where we're set. Here's where we closed out the month of January. I tend to be a little bit cautious when I go into January because knowing myself from past trading experiences, my Januaries can be, if I finish January in the green, it's been a successful January. And so I'm very pleased. We were up about $1,600 in January. Profits from active trend trading was $1,600 last week. And a couple of things, here's the time of year we're at. NASDAQ and the other indexes tend to run sideways. until we get through March. Crude tends to sell off. Crude was the only sector that we looked at last year that really followed the that really followed the seasonality, and so we keep an eye on gold futures. Gold is, in fact, maybe getting back in line to follow the seasonality. So we're into February. If seasonality continues to work, gold should still continue to push higher. So future presentation, hey, tomorrow, if you're a BAM member, we will be doing our webinar for the month, Clear and Simple Trading Rooms, and I'm also going to be talking about the IBD 50, how it succeeds year after year after year, what were the winners on the IBD 50. Streaming videos on Facebook. I've had to postpone that because of disconnect between Zoom and Facebook. They're not talking to each other right now. And then last but not least, hey, other enhancements. The conversion to market action points is finally complete. And, some of the added features of market action points compared to what it replaced is that if you'll remember back in 2017, if you are a early warning alerts member, we had one signal. It was right here. However, we improved that with early warning alerts, providing more signals, but then also these additional secondary signals that we call minor signals. That doesn't mean it's going to move minor. And so I was a commander in that picture, David, not a lieutenant in 05. So when you add in the extra, bonus trades for the year, you wind up with additional compounding, but the joint compounding really works well, bumped it over 25%. This is just on trading IWM. So, MAPS is finally launched. If you're interested in it, just go here and look at the intro. That's at activetrendtrading.com, activetrendtrading.com /MAPS charter intro, because we want to give people the opportunity to become a charter member, and that's limited to the first 30 people who register. So until next time, 2019, I believe, is a year of completion, and where we're going to basically come closer to completing the deal, becoming absolute fantastic master traders. And so keep the A growing, trade wisely, trade profitably. You can reach me at those places or at my email, dww@activetrendtrading.com. And so we'll get started at the top of the hour with the premium final hour for members. So until next time, as I said earlier, hey, if you're not an Active Trend Trading member and you would like to know how to get become one at a discounted price point, email me. And if not, again, have a great weekend. We look forward to chatting with you on Monday. Aloha, everybody. God bless. Hey, good day, traders. I almost forgot. This weekend, our special for the Active Trend Trading membership actually expires. And so if you get an opportunity, check out this website, activetrendtrading.com, premium-membership-special. 40% off the membership price, and you can also sign up for it on a quarterly basis. Really cool. Remember, it is password protected, and the password is SAVE, S-A-V-E, all caps. Aloha. God bless everyone.